Hey, it's Mark from Caliber. It is January 31st, last day of January. This month just kind of flew right by. And we're off into February. So last week we talked about the virus in China and how it would affect markets, and I thought that if the markets really take a nosedive, it's going to push rates down in a big way. Well, the markets took a nosedive. The stock market had a rough week. Today we're going to close about 600 points down. Last Monday we were down 450 points. It kind of moderated during the week, and then we got hammered again. Today also was the first day that Great Britain officially exited Europe. So Brexit is in full effect. I know that had some effect. But the surprising thing is that most of the money coming out of the stock market did not go into mortgage-backed security. I know that not all of it goes in there, but I thought more of it would go. A lot of it went into the U.S. bond market just because it's the safe haven, and it's backed by the U.S. government. It's not backed by a bunch of mortgages. But I thought we would get more of a push down. We did get a little bit. Rates did go down a little bit this week. And I expect that trend will continue next week. I don't think that this is going to end anytime soon. But by and large, we're not getting the big push down with all the money flowing out of the stock market that I had thought we would, and other people that I talked to thought we would. So let's take a quick look at the chart. So what you're looking at is today's chart. So we ended up just about where we started for the day. So let's take a look at the week. So you can see the week. So this looks better than it is. Obviously, the trend is up. So here's Monday. This is where the market went down 450 points on Monday. But if you look at the pricing difference, remember this is price, not rate. So if you look at the price, we start out just under 102, and we're going to end up at 102.2. So there isn't really there's not a real big move there. It looks better than it actually is. That's why we didn't really get that big push down with rates. Although rates are a little bit lower, but I just thought that we'd get more of an impact. And let's go ahead and take a look at the last month. So obviously, we still are in this upward trend. You know, a month we started 101.5, and we're about 102.2. So that's a decent spread. You know, overall rates have gone down over the last month. You know, you're going to get your hiccups. You know, it's a daily event. Next week is jobs week, so we've got 3 different jobs report coming out. We've got the we've got the ADP employment on Wednesday, the weekly jobless claims on Thursday, and the big one is the employment numbers on Friday. So remember, positive news for any of these is considered inflationary, and that pushes rates up. And if they're not up to expectations, that's not inflationary, and rates tend to like that better. So rates might actually waver a little bit and go down on their own, aside from everything else going on. Anyways, so that's kind of where we're at. What do I expect for next week? Outside of the jobs reports, I think that I don't know how much Brexit's going to really have an effect. I'm not quite sure. I don't think it's going to have too much of an effect. But I do think that the virus the scare is going to continue to weigh heavily on the markets. I know more and more companies are shutting down travel to China. The airlines are shutting down travel to China. So as this becomes a bigger deal, it affects the economies more. And as it affects the economies, both the U.S. and global, then you're going to see an impact in the stock markets both here and abroad. So we'll just have to keep an eye on it. You know, so those of us with money in the stock market, it's not been a great week. It hasn't been a great month. But for those of us in the real estate game, you know, rates are still low. People are refinancing. People are buying homes. More and more houses are coming on the market. It's a great time to buy. I've seen multiple studies now that say that buying, especially in Southeast Michigan and Michigan in general, that buying is cheaper than renting. So let's get out there and look for houses. If you need a pre-approval, give me a shout, 248-705-8431. And let's go. And the Super Bowl. Don't forget to watch the Super Bowl. It should be a great game. This is going to be a good game. It's not going to be a couple of lame teams. This should be, I'm predicting, a battle. This should be a battle, so it should be a great game. So have a great weekend, and talk to you soon. Thanks a lot.